May profits be upon you. Welcome to another weekly Forex forecast. Thank you for joining me. This is going to be an interesting week. Why? Because if we look at the economic calendar, we can see that there's a lot of juice infused into the markets this week, like uh, interest rates, interest rate decisions for the Aussie dollar, for the Bank of Japan, for the US dollar, FOMC. Big day on Wednesday. Look at that. Look at that. Canadian rate interest rate decision as well on that day. And then the Swiss have one on Thursday. Interest rate decision. Lots of juicy juice going into the markets. Okay. So be extra careful. Now, on Monday, there isn't a whole lot other than the Aussie dollar and their cash rate. And you see what time it's talking about, 10:30 p.m. Eastern Standard Time. So essentially, for people that are living in the Eastern Standard Time zone, there's nothing happening on Monday. There's no red folders. Okay, you got to be careful on those days because the price action can get a little wonky because there's no news drivers. All right, so be extra careful with your trades on those days. I like to sit out on those days or play the sidelines. A lot of times I sit on my hands, but sometimes you take a chance on them. But they're not high probability. That's not a high probability trade environment. That's all I'm saying. Now, looking at the U.S. dollar index. We're looking at the U.S. dollar index right now on the monthly time frame. You've been seeing this on my charts for months. For those who've been sticking with me for a while, it's a channel going up. All right, I'm not taking buys when it gets down to the bottom, and I'm not taking sells when it gets up to the top. That's not the way I trade. All right, that's for support and resistance guys. All right, I mark the channel because I am marking structure. All right, and what we have is an upward truck structure here, an upward moving truck structure. And, there's a good reason to think that maybe with other confluences, we may see price move up from here. All right. If we go to the weekly, things start to get a little clearer. All right. What do I got here? Some notes, right? This is something we'll see later. Yeah. So we're at the support line of this channel, right? And I've been talking about that we're probably going to spend some time here, like we did on the other touches of the support line here. We spent a lot of time here. We spent like 5 or 6 months. All right, we spent some time on this one. If it'll give it to us, I don't know why I'm having this delay here. All right, we spent some time here as well before price finally took off to the other side. So I'm thinking the same thing over here. Price is kind of moving kind of sideways now, right? We made the low, we made the high, we made the lower low, we made the high, we made this lower low. We swept, excuse me, that low, all right, at the support line of this ascending channel, and we moved up. All right, so and we cracked here. We cracked that market structure there. All right, now this isn't this isn't by itself a bullish sign. It's a bullish indication. All right, but it doesn't make me want to continue taking buys when price gets up there. Why? Because we didn't trade through. We didn't close above this high. All right, and that makes me nervous. Why? Because price when it sweeps a high like this one and it starts to head back down, that means there's more business to take care of down here. All right, and as long as I think we stay above that low, we'll eventually turn around because this looks like a trend changing pattern here. All right, with these lower lows, lower lows, lower lows, then we make a higher high for the first time here. So I'm looking for this high to break so that I know that in the grand scheme of things, we have changed directions and we're heading up to the top of the ascending channel here, but we didn't break that. We broke this. All right, so this could be what you want to consider a change in this, a change of character in the larger weekly time frame here. All right, but right now we're looking right here. All right, and what happened is we had this pullback, a push higher. If this candle would have closed here, then I would think, hey, if we see a pullback, wait for the pullback to end, and then we can go on and head up. That's not what happened. We didn't close above that. All right. And what price did was we pushed down, and we closed below that low. All right. This is a bearish indication for me. All right. This is a very bearish indication for me. And we took liquidity here. So we could be on the sell side of a market maker model here, and I think we might be on the sell side of it. Doesn't mean we have to go all the way down here. Just means that we're probably in a good pullback, and I think that we're probably going to be ending up right there. Now let's take a look at the daily. What are we looking at here? What did my notes say? First, on the daily, on Wednesday, December 10th, we got the FOMC. All right, that's going to be an important market mover there. I don't want to be in trades, and I suggest that you don't either, because that's a highly volatile news driver, and it could take you out of trades that you're in, whether you're buying or selling. The market, once it gets the news, it does this kind of number, and then it makes then it moves in the direction it's supposed to go in. But it might go low first, and then up, and then back down. You understand? You don't want to be around for that. That could be rough. Okay, so other than that, we have this sweep of the high up here, right? And look at how the market created this bullish fair value gap right here, all right? To do what? To sweep this high. That's all it did. And then when price started to move its way down, what do we have here? We have a market maker sell model, all right? The market maker buy model did all of this, those higher highs and higher lows, all right? Now we're probably going to see the exact opposite, at least to 75% of this trading range, from this low to this high. 75% will put us right around here. You know what I mean? Right around this low. All right. So just keep those little notes in mind that I mentioned. All right. So if price breaks below this low, I think we're going to continue down, and we'll be heading towards this liquidity low here. And this is where the pullback could end. Once it takes sell side liquidity here, all right, we could end right here, and price could turn around. But we'll see what happens when it gets here. That's all. But in order for that to happen, folks, this fair value gap here, this bearish fair value gap here, has to hold in order for that to happen. So I'm looking for this bearish fair value gap as an indicator whether we should be buying or selling. If it breaks this high, I'm waiting for price to come back here for like 50% of this fair value gap here. I'm waiting for price to revisit that 50 percentiles, excuse me, wait for it to get above it, come back to it. This is going to be a high probability trade to the upside, in my opinion. Okay. For the same reason, this was a high probability sell. Why? Because this is a fair value gap. Price used it to sweep this high. Price came back through it. And once it failed, price came back into it about 50% right here, and then dropped. That was a great sell. This is a guaranteed sell. When you see the what is this called? Turtle soup. All right. When price comes up here and makes a sweep at a high, and then comes back towards the low that created that high. And that's exactly what it is. Swept that low. All right. Not only did it sweep it, but it closed below it. That means the pullback is a good chance for a short to be taken. All right. I want to sell it just like here. This was a great short to be taken. All right. The price gets past this because we already used this area. I'm thinking that let's get rid of all of this. All right. If we get back up there, this was all taken. I'm looking for that high to get to become the target, the first liquidity target up, and then the next one here. Got it? That's a lot of ifs I gave you. All right. Be quick. What you want to concentrate on is this. If I can get it to draw, thank you. I can't apparently. All right. That fair value gap, look for it to hold, and we can head towards this low and then this low. All right. If it doesn't hold and we get above it, wait for a price to come back to it. And we'll probably find a high probability trade to the upside, at least to that liquidity high right there. Got it? Okay. I hope you. I'm looking for more downside. Actually, because of the interest rate decision, people are baking in 25 basis points, and that would be a bearish catalyst for the US dollar index. Okay, if there is no interest, no cut given, then that'll be bullish, and we'll be heading up. So look for that dynamic. Look for that daily fair value gap to get either disrespected or it holds. All right. I got a bunch of videos to put out. I'll see you in the next video. The next one will be the Euro USD, and I will see you there. May profits be upon you.